Stocks rally this past Friday, yet still finished the week in the dumps amid a cloudy outlook about what the latest payroll numbers mean for the future rate hikes. The Dow climbed 1.26%, the S&P 500 grew 1.36%, and NASDAQ rose 1.28%. Despite these gains, these averages capped off the week with losses. Hawkish comments from Fed Chairman Jerome Powell on Wednesday increased worries that the central bank could keep boosting interest rates for longer than previously expected and put further pressure on stocks. Fed officials on Friday echoed Powell's comments about potentially decreasing the size of rate hikes, but still needing to continue to raise rates for a longer period of time than expected and potentially above the 4.6% level the central bank penciled in back in September. Now, in light of this news, which stocks suffered the most? Let's find out today on today's episode of Money Talk Sundays. Welcome to Money Talk Sundays. I'm your host, Stevie B. For those tuning in, you know the drill. You're tuning in on your favorite streaming platform. Hit that like and share button. You can also subscribe to the Money Talk Sundays podcast. The link is down here. And for those viewing on YouTube, like, share, and subscribe. Make sure you hit that notification bell so you can ask YouTube to give you a notification every time we drop a video on this channel. Now, coming in at number 5 with a loss of negative 54.73% is Rogers Corporation, ticker symbol ROG. It closed trading Friday at $105.62. Rogers Corporation designs, develops, manufactures, and sells engineered materials and components worldwide. It operates through Advanced Electronic Solutions, Elastomeric Material Solutions, and other segments. The AES segment offers circuit materials, ceramic substrate materials, bus bars, and cooling solutions for applications in electric and hybrid electric vehicles, wireless infrastructure, automotive, telematics, and thermal solutions, aerospace and defense, mass transit, clean energy, connected devices, and so much more. Now, shares tanked on Thursday after the DuPont deal that was initially announced fell through. Rogers was set to be absorbed by chemical industry DuPont in a $5.2 billion deal that would have valued Rogers at $277 per share, nearly 50% above his current share price. Now, those hopes were dashed this past Tuesday after market hours when DuPont announced it was pulling out of the deal due to the inability to obtain timely clearance from all the required regulators. China. So, that's number 5. Number 4, fourth place, we have Funko Incorporated with a 1-week change of negative 61.24%. It closed trading Friday at $7.92 with a trading volume of 15,197,428. Funko, ticker symbol FNKO, is a pop culture consumer products company that designs, sources, and distributes licensed pop culture products in the United States, Europe, and internationally. The company provides vinyl, blind pack, miniature, and action figures, fashion accessories, including bags, backpacks, and wallets, apparel such as t-shirts and hats, board games, plush products and accessories such as keychains, pens, and pins, homewares comprising drinkware and other home accessories, non-fungible tokens, and others. Now, Wolf Popper LLP announced Friday that they are investigating FNKO for potential securities fraud on behalf of investors in the common stock. After the market closed on November 3rd, 2022, Funko announced its third quarter results and EPS came in significantly below what the street was expecting and revenues came in above expectation. In addition, Funko lowered its full year 2022 guidance. On that news, Funko stock price collapsed $11.58 per share to just $7.92, or down 59.4 cents on very heavy volume. Now, despite this, revenue growth was actually pretty good for the company, reporting 36.6% growth, raising their revenue to $365.6 million with solid growth in all regions and categories. That easily beat the estimates of $319.6 million. But that growth was for naught. Profits fell as gross margin declined 100 basis points due to higher production costs, and the company ramped up spending on increased infrastructure investment. As a result, the earnings per share slipped from 28 cents to 19 cents, well below the general consensus of 50 cents. Now, in third place, we have Quotient Limited. Quotient, ticker symbol QTNT, fell by 64.07%, capping off Friday's trading with a closing price of $1.95 and 171,617 shares in trading volume. Quotient Limited, a commercial stage diagnostics company, develops, manufactures, commercializes, and sells products for the global transfusion diagnostics market in the United States, France, Japan, and internationally. The company is developing Mosaic, a proprietary technology platform which provides tests for immunohematology, serological disease screening, and molecular disease screening. Now, QTNT announced a reverse stock split during the latter part of this week at a ratio of 1-for-40. It went into effect at the close of trading Wednesday, and upon opening of trading Thursday, shares were trading on a split-adjusted basis. Consequently, every 40 shares of the company's ordinary shares issued and outstanding was automatically reclassified into one ordinary share. The reverse stock split did not modify any rights or preferences of the ordinary shares. Coming in at number 2, the number 2 spot goes to Polmonks Corporation, ticker symbol LUNG, Lung. Polmonks had a 1-week change of negative 64.73%, closing trading at $4.82. Lung is a medical technology company that provides minimally invasive devices for the treatment of chronic obstructive pulmonary diseases. It offers Zephyr endobronchial valve, a solution for the treatment of bronchoscopic in adult patients with hyperinflation associated with severe emphysema, and Chartis pulmonary assessment system, and balloon catheter and console system with flow and pressure sensors that are used to assess the presence of collateral ventilation. This week's biggest loser, however, goes to Selena Hospitality PLC, ticker symbol SLNA. Selena had a 1-week change of negative 68.06%, closing trading Friday at $3.61. Selena is one of the world's largest lifestyle and experiential hotel company built to address the needs and desires of millennial and Gen Z travelers, blending beautifully designed accommodation with co-working, recreation, wellness, and local experiences. Custom built for today's nomadic traveler, Selena provides guests with a global infrastructure to seamlessly travel, work, and play. Now, BOA Acquisition Corp intends to acquire assets of businesses through a merger, capital stock exchange, stock purchase, reorganization, or similar business combination with one or more businesses that focus on technology businesses in the real estate industry. So, are you invested in any of these stocks? When did you jump in? Are you losing? Are you winning? Are you playing options? You doing swings? What's the deal? What's the play? Let us know here at Bros Nation. Drop it in the comment section. Until then, that's all I have for you guys. We have your top losers for the week. I'm out. This is Stevie B. Happy trading. And let's go football.